This is Dan Dicks here reporting for Press for Truth, and what a crazy weekend it's been for the gold market. If you've been paying attention to it as I have, you may have noticed this. Gold flash crashes by almost $100 as 4 billion in sell orders hit in the liquidity void that follows the resumption of futures trading, and which saw U.S. futures trade modestly lower. A sudden burst of selling in the gold futures contract sent gold prices plunging to as low as $16.77, or almost $100 lower from the Friday close of $17.61. And if I go here and I refresh, well, let's get the absolute latest numbers. We see we're already back to $17.29. So actually a pretty decent recovery. Meanwhile, the Fed is on the verge of completely losing control. 25% of consumers now expect inflation in 3 years to explode to 8%. But have no fear, these central planners will just tell you this is all just transitory. Well, joining me on the line right now to help us make some sense of all of this is Johnathan Moore of Starr Mining. StarPeakMiningLTD.com is the website. Sir, thanks so much for joining us here today on Press for Truth. Now, I want to get your thoughts on the commodity space in general, the gold prices, what's been happening, and where you see this going in the near future. But before we get into any of that, maybe you could start us off on where you stand on the inflation debate. Do you see this continuing to rage on, or is it more, as the Fed would have people think, that this is just transitory? Where do you stand on the inflation debate?
No problem. Hi, Dan. Thanks for having me on. You know what? It's I'm scratching my head today and yesterday when I saw this flash crash. It's in my mind completely technical. The fundamentals really does not make any sense looking at these price gyrations. The whole inflation trade here, I mean, it's here and it's here to stay, and it's going to be here for a very long time. These feds are printing money at a crazy, unprecedented rate. We just apparently got a $1 trillion stimulus bill passed, or the Congress basically are putting it through to vote over the weekend. I think it's going there this week. We should see that go through. And that's tied to another $3.5 trillion that they're begging for this infrastructure plan. So you tell me this, you tell me that we're about to print in the United States close to $4 to $5 trillion in the next 2 to 3 weeks, and we're not going to have an inflation problem. That's just complete and utter nonsense. You also have to take a step further. Now, we're talking about all this printing of money going on in the United States. Well, this is happening in every country around the world. And last time I checked, gold isn't just an American investment. This is a global investment. So anytime that you have other nations like Europe, UK, China doing the same sort of thing, it just is. I mean, look at the bigger picture around the globe. So no, inflation's here and it's going to be for a very long time.
Well, traditionally, people around the globe in times of uncertainty and when, questionable things are happening around the world, people would often kind of hedge themselves against global uncertainty. We don't know what Biden's going to be doing in the Middle East. We don't know what's going to be happening with this pandemic in the third and fourth quarter. So is it a good time in your view to hedge oneself against a potential dollar crash, for example, by storing up some gold?
I mean, absolutely. We've started a couple of years ago doing that same thing. We actually moved to gold and getting into the metals and mining markets actually before COVID. So COVID wasn't even in the equation, and now COVID's come, and now we're in the middle of it, or hopefully near the tail end of it. And so I think that's just added the extra cushion to why we went into this area to begin with. These are all cyclical, all right? Metal markets, mining markets, gold prices, it's all a cyclical trade. So yes, it's, you have to be obviously concerned about inflation. And the way to be concerned isn't just waiting and sitting there waiting for it to happen. It's actually being proactive in your portfolio. I might add, I mean, if you wanted to go buy physical gold bullion right now from any site or dealer or whatever, is the seller of the gold, you can't actually get delivery of the stuff. So I'm trying to scratch my head here. You're trying to buy physical bullion, yet there's a shortage and the price keeps going down. For me, something doesn't add up. The demand is there, and I think we're going to see it here very, very soon.
Well, we got guys like Goldman Sachs, UBS, Credit Suisse, JP Morgan, and the likes saying we're in a commodity super cycle here. In early 2020 and 2021 especially, we've seen stuff with copper, zinc, other base metals. What do you think? Are we in a commodities super cycle? You mentioned they're printing into oblivion. What's that going to do to the commodities moving forward?
Yeah, so I look at base metals, predominantly copper, zinc. Let's also throw in some other materials in there, not metal related, like lumber and prices that we see on a daily basis. Now, the prices in the last year on these commodities have skyrocketed. And in my mind, I believe we're in the second inning. So if I'm putting it into baseball terms, I mean, we have a long, long way to go in terms of this cycle. I made reference a minute ago to the infrastructure plan that the US has in shape. And what does that mean? Well, they're raising all of this money in order to upgrade the roads, bridges, railway, infrastructure. And definitely in that plan, and the way to, make that work is you're going to need all these commodities. So the demand is going to be far greater than the supply. And yes, I believe the base metals for sure. Base metals get consumed. So when you're looking at zinc, copper, and these types of materials, they get consumed. Whereas gold doesn't get consumed. It's more of a store of wealth. So the super cycle in the base metals boom is just beginning.
Yes, and this is why it's an excellent and exciting time to get involved with these things. You are a part of a company called Starr Mining, which has recently made a pretty significant discovery. Can you tell us about that?
Yeah, we were, we believe we're smart about it, but we're also very lucky at the same time. And I'll take luck over smarts most any day of the week. We have found what we believe to be a significant VMS style deposit. A VMS is, it stands for volcanogenic massive sulfides, very heavy in base metals. We have a very high grade and some very good intercepts of zinc, copper, and also some precious metals like gold and silver. The reason this is unique is VMS deposits are very, very rich in nature. And when I say rich, it means that the general mining life of a VMS deposit is very long, because the formations of the massive sulfide zones are all in clusters, and it's very, very close together. So you can really kind of make it last for a very long time. They tend to be quite large in size. And also, it's a beautiful way because you are not only just sitting on, say, gold and silver, you're actually also getting zinc and lead and all these other base metals there you're able to get credit for. So the cost economics of actual eventual production is so much greater than just one commodity. And it's very rare. I mean, in the last decade, we haven't seen very many base metal, VMS type deposits. If you could name a couple, I'd be very surprised. But it's this is kind of, when we made this discovery, the market actually really liked it. And there's only 350 known deposits in Canada on the VMS side, 800 of them worldwide. And just in Canada alone, VMS deposits account for 27% of all copper production, 49% of all zinc production, as well as 40% of all the silver production. So you can see that this makes up the basis of a lot of Canadian production. We acted quickly in our area. If you want me to tell you about the area we found,
yeah, for sure.
We were first into an area that there was a big discovery made by Amex Exploration, a very big gold discovery, and we were early investors in that, and we really liked the area. This is in Quebec, Canada, in the Abitibi-Greenstone Belt, such a prolific mining area, mining jurisdiction. It's a great place to operate and have a mine. And we acquired some land to the east of Amex. And then we also went a step further and actually acquired a past producing mine, a mine that was one of Quebec's largest VMS deposits over history, produced 10.1 million tons of zinc, copper, gold, and silver through the 1900s, and stopped production in the early 1980s because of the base metals prices collapsed. So we went in and we drilled, and we hit a massive VMS system. And We have just announced an expansion up to 60,000 meters of drilling. We originally started at 5,000. We went to 20,000. We went to 40,000. And today, actually, we just went up to 60,000. We are fully funded. And we're hitting massive sulfides in 96% of all of our drill holes. So kind of shows you that this land is very rich and it's everywhere. And I think that high percentage of our hit rate is something that we're most proud of.
Yeah, no doubt. Is that why you purchased this past producing mine, because of a track record, or you could just kind of,
Yeah.
right? Like,
So when you get a past producing mine, in general, it can also be a liability. I mean, how did the past owners leave the the tailings if there was something, or what was the shape of it? And you don't want to have an environmental liability. Yet it was decommissioned. It was done properly. The reason for that Normatal mine was actually the reason why Amex went up to this area to begin with. So this was what historically we thought was the source for this area. The only, another thing that we have an advantage of is we have all the past mining and drilling data from that mine. And this isn't a very important thing to notice, because we could then see where the zones were, what depth, what they looked like. We had basically created a 3D model from this Bible of data, which our great exploration team managed to put together. And what that did is it just told us and gave us more confidence on our first few drill holes that we put into the land that we're drilling. We're only drilling about 700 to 800 meters away from that past producing mine. And I might add, when they stopped production in the 1980s, well, there's been so many more advancements and techniques to be done now that wasn't available back in the 80s. So, for instance, when we see a zone and we put a hole down, we can send a probe down and we can actually see the conductivity of the rock at a certain depth. And then what we can see is if it lights up, then that's an area that we have to penetrate and we have to get, drilling into. So the technology and technique that we have now been able to expand from the prior knowledge has been one of our keys to success. And I think, the more drilling we do, we can really, really prove the size up of this asset.
Wow, those guys are probably wishing they didn't give it up. Considering how well it's going, where would you say you see things going for the company in the next couple weeks or months? I know you don't have a crystal ball, but where would you like to see this go in, let's say, a few months?
Well, all I can promise everybody is that the drills will not stop. We are going to drill and drill and drill and drill. So in my mind, the only way to increase the market cap or market value of the company is result driven. It also helps having a flamboyant mining market. So hopefully the price of gold will rebound and we can actually get more into a speculative market. Now, we aren't just a gold play. So, we're more zinc, copper based. However, as everybody knows, the gold market generally dictates the market for everything else. When you have a fully funded company with a 60,000 meter drill program that isn't going to stop, this is, in my mind, a very good way to play these, junior mining markets. Every hole we put in, we are adding size, and we're funded. And this, the drilling isn't going to stop, so the news flow is not going to stop, and it's going to be very exciting for the next 6 months to a year.
I agree. I really, really think it's an exciting time to be involved here. And for anybody who does, it's important to not only do this wisely and do your due diligence, but you have to have an exit strategy as well. Is there some sort of an exit strategy for shareholders that you would advise for people?
Well, it's a good question, because a lot of people in our boat will want to say that they want to be the next large producers of VMS rock. We were going to be a copper producer, silver, gold, all the above. And all I can say is that, and whenever somebody tells me that, it kind of scares me. What we are good at is finding a resource and building it up to the biggest possible size that we possibly can get to. When you start production, it's a whole new set of rules, whole new set of players, and it's a good way to go from, in my mind, the penthouse to the outhouse. So what the majors do now is they don't do any exploration themselves. They rely on companies like us to go out and do that dirty work, find an asset, build it up to a size, show them the economics, show them how good it is. And then their plan, their exploration is to come in and buy us. So we've done all the exploration for them, and we're just handing it to them on a silver platter. So we are interested in building this up quickly, and VMS deposits you can build up very quickly because there's a lot of zone. I mean, it's just you build up mass very quickly because of the clusters that these things are in. And we believe that we get it to a size and scale that we think we can lay this off to, then the exit would be obviously having a major come in and liquidate you.
Mm-hmm. Yeah, fantastic. And to be quite honest, I feel that moving forward into the third and fourth quarter of 2021, we are probably heading towards some more great deal of uncertainty with this fourth wave of this pandemic, with things Biden may or may not do in the Middle East. And I think now is a really good and important time to start to hedge ourselves against a potential dollar crash, or who knows what may be coming. And gold has always been a safe bet for me. I've always felt it's a very, very good way to go. And I know my audience feels the same. So where should they go right now? What's the best go-to place for them if they want to learn a lot more about Starr Peak mining or get involved?
Sure. Yeah, we're very obviously a lot of news flow on the company. We have a website, starpeakminingltd.com. Our Canadian ticker symbol is Sam Tom Edward, STE, and in the US, STRPF. And really, there's a lot of information out there. We're very proud of it. And like I said, the drills are just going to continue, and you know, hopefully better markets will allow us to dictate it, and we can actually get this thing sailing and moving up in price as we all anticipate.
Yeah, I see it absolutely going up. You know, we don't have a crystal ball, but I mean, just look around, you can kind of tell where things are going, and now is the time to get involved with things like this. So I want to encourage everybody to check it out. I'm going to have links to the ticker symbols and the website, and where anybody can find more information in the description below. So I encourage everybody to check that out. Once again, Johnathan, thanks so much for joining us here today to help break this down for us.
My pleasure, Dan. Thanks for having me on.
Take care. We all want truth. The truth will set you free.